Hello guys, this is Aman from Gyanthan. At Gyanthan, we have helped 15,000+ students getting 5,000 crores in education loans. Through our experience, we have come up with secret sauces on how to reduce your abroad education loan interest rate. So today in this video, we are going to talk about all such points. Before we go ahead, if you are going for an abroad education, I recommend you to click on the subscribe button below so that you can get a notification whenever we are releasing a video on abroad education. So let's start. The first point, apply for a secured loan, that is loan with collateral or security, as compared to an unsecured loan, which is loan without collateral or without security. The reason for same is that when you apply for a loan with collateral, the bank has lower risk and thus they are able to offer you a lower rate of interest as compared to the unsecured loan. In general, secured loan interest rate is lower by 1 to 2% as compared to the unsecured loan. Moreover, the chances of approval is also higher when you apply for a secured loan as compared to the unsecured loan. Point 2. Apply for a bank loan as compared to any other loan. So there are different kind of players in the market. One is banks, other is NBFCs, the third is international lenders. So when you compare all of these, bank will always give you a lower rate of interest for the same profile as compared to any other. In fact, among banks, prefer public sector banks as compared to private banks because public sector banks has policies that lowers your interest rate. For example, for a female candidate, you can get a subsidy of 0.5% and there are insurances available which you take that further reduces your interest rate. Point 3. Apply for a loan with the help of a loan counselor. For example, Gyanthan offers its loan counseling for free to help students to get an education loan. What are the benefits of that? The first benefit is the rate negotiation. So when you apply for a loan with the help of loan counselor, they process your application in such a way that you get one or more than one approvals. If there are more than one approvals, we leverage those approvals in getting you a better rate of interest. Not only that, we can also negotiate the processing fee. So the interest rate and processing fee at most of the banks, except for the public sector banks, is negotiable. So they try to obviously charge you as high as possible, but given our experience, we know which kind of profile can get what lower interest rate, and we help you getting the same. Point number 4, apply on time. Now you must be thinking, what kind of advice is that? But we have seen in our experience when students apply when they don't have enough time for the processing. Like for example, 5 days time for the visa interview or 5 days time to any other deadline. In such cases, lender charge premium for the faster processing. Not only that, you also don't have enough time for the negotiations that we talked about earlier. Point number 5, refinance the loan. Now, let's say if you have received a loan offer or you have an offer basis all the efforts, you couldn't get the lowest rate of interest. That's fine. You can go ahead, you can take that loan and go for your education. Now, once you graduate, 6 months after that or 1 year after that, now you have a job, right? So your profile has become stronger than what it was when you were applying for a loan as a student. So there is a term called refinancing of education. That means a new lender now will look at your profile, which is stronger by the way, because now you have a job. So they will evaluate your profile and they will approve it at a lower rate of interest. The new lender will transfer the money to the old lender. That means your old education loan will be closed and new education loan will be there, which will be at a lower rate of interest. So the bonus point. So this point won't reduce your interest rate, but will save your interest money. Now what happens, as I mentioned earlier in the video, there are different kind of players, public banks, private banks, NBFCs, international lenders. So when you apply for a loan at the international lender offers you the loan in other currencies such as USD, Euro, Pounds. Now the students start comparing international lender interest rate with the Indian lender interest rate, which is not comparable at all. Usually for Indian students, the other currency loans are costlier as compared to the Indian loans, even though they might look cheaper on the paper because of the currency fluctuation in the picture. Now, if you want to understand this in more details, we have a video where we are comparing INR versus USD loans, which you can find on our channel. So that's it for this video. If you find it useful, please like, share, and also subscribe to get regular updates about our YouTube channel. Thanks a lot.